I'm starting with one of my favorite companies in the world, and that is Applied Materials. Applied Materials, Tackle 25 Darling. Tim, how long has it been on the Tackle 25? Is this 5 years now?
You know, I think it's
4 years?
5.
I think it's
No, I
5.
think it's 5. I
It,
think
it doesn't have
2016.
the Apple, Disney, Microsoft has always been on that, but it's like 4 or 5 years now.
Yeah.
One of our favorite companies in the semiconductor space. I put it up there with Taiwan Semiconductor from a fundamental perspective. Obviously, we love our AMDs and our Microns of the world to trade, but when it comes to just absolutely fundamentals, like fundamental analysis, it starts for me with Applied Materials and Taiwan Semiconductor. And Applied did nothing today to stop this amazing trend that's been happening in Applied Materials in recent history. Applied Materials comes out today and says they reported $1.39 a share versus the expectation of $1.27. Revenue beat the expectation of 5.2 billion versus the expectation of 5 billion. That 5.2 billion did represent a 24% increase year over year, Q to Q. That is the third consecutive 20% plus revenue beat for Applied Materials dating back to last August, which means we now have a three's a trend, right?
3's a trend.
That's what Major League taught us back in
That's
the
what
day.
Major League told us.
Yeah, 3's a trend. So they certainly have a trend in 20% beats on revenue. What a fantastic report there.
Wow.
They also, this is another kicker here, increased revenue and EPS guidance by 15% on both accords. So not a trick, Tim. They did a legitimate increase in guidance there. So we got that, what do we call that? That triple whammy, beat, a beat, and a beat here. Nothing really to add from a technical perspective. This is a great, fantastic, fundamentally driven company with a great future in front of it, in my opinion. So to me, Applied Materials isn't really a trading company. There are better semiconductors to trade out there. But for the investor class out there, Applied Materials isn't going to shake their confidence in any capacity. They're going to be looking to add over time. Let's move on to Roku here. Roku at the top end of the channel needs to impress, right? These types of companies, Applied Materials, man, you've been so good for so long. You can have a miss and be forgiven. Roku, you're up 110% in the last quarter. You need to show something sexy. You need to do something good here. And Roku, you did. You maintained. You did enough to maintain. You did enough not to get dumped here, Roku. In fact, I'm very, very impressed with Roku's overall performance in the quarter. Roku was expected to show a loss of 5 cents. This is kind of like a little bit of a Disney thing. Remember, Disney was supposed to show that loss, came in about 50 cents above the expectation. Roku comes in, was expecting a loss, comes in about 54 cents above the expectation. They come in at 49 cents versus the expectation of a -5. Revenue beat the expectation at 650 million versus the 615 million anticipation. 58% revenue growth year over year. They also increased just revenue guidance, not EPS guidance, but just revenue guidance by about 10%. And for the first time, they surpassed the 50 million active accounts. And I think at this point in the digital media, revolution we've seen, there's enough streaming companies to do more than 3. You remember that a few years ago before Disney Plus was announced? Like, how many? At what point are we going to get to
Are
the
we
point
saturated? Right.
Yeah, right. And everyone's like, well, it's going to be
How
like
many
3 or
subscriptions
4.
do all of you
At
have?
this point, everybody has every single one of them, because now Roku has 51 million, Disney has 110 million, Amazon has untold hundreds of millions. Who knows? Everybody does them all at this point. And so Roku comes out, very impressive. Trading, this is a great trading company. It's a great cash flow company as well, from the bull put, naked put type arena, more in the bull put side of that equation. But technically here you are setting up. I don't like the buy the dip mentality here, because you're too tight against that resistance channel. Buy the dip down here, a little bit of a different beast. Buy the dip down here, a little bit of a different beast. The dip here you're looking at is so tight up against the consolidation, you're probably waiting for a little bit of a breakout there. And if you need to smooth out that data, looking at that weekly chart, you start to see how that data gets real smooth above that channel at 486. And so let's give Roku a week. You know, it certainly could break out next week. I'm certain we're going to have a conversation about it. And the conversation is, well, are we too early here? Does it need more time in the cooker? I'm sure we're going to have that conversation. It may or may not be on a report this week, but I do think a little bit of time in the cooker is going to set up that breakout of 486 to be something pretty decent for Roku. So I think Roku is a watch list candidate following a very impressive, a technical watch list candidate forming after a very impressive earnings beat, especially on the EPS side with that really healthy beat. And then finally, we get good old fashioned, and I know it's just called Deere, but I'm always going to call it John Deere because that's how I grew up, and I'm not going to change. So John Deere here comes out and they're like, yes, we removed the John of the part of the equation, but we're still putting out record revenues, record earnings per share, a robust report coming out of John Deere here earlier today. 387 on the EPS number. The expectation was 215. That is rock star status. That status is usually reserved for tech companies, communication companies, and brand name companies. Here's John Deere, man, showing them how it's done. Just utter destruction of all things EPS here today. Revenue topped 20%, over 20% against the expectation. $9.1 billion on the revenue, 7.1 on the expectation, 19.4% increased revenue year over year, Q to Q. And they also, if the EPS number was not good enough for you, if the revenue number was not good enough for you, if 20% increase in year over year revenue growth for an infrastructure industrial company like John Deere is, and again, I know it's not John, and again, I don't care. If that is not good enough for you, they also increase revenue and EPS guidance as well. Looking for a robust year coming out of old John Deere here. Gotta love the breakout of 320. So strong. It's a momentum at this point for an industrial stock like John Deere. I don't like trading momentum. I think this is a scenario where we be a little bit of patient and we see how it navigates that 320 breakout.